Morning, Steve Reed in Chicago with the morning grain comments. Well, we have a new month, and June is usually a month in which we trade U.S. and global weather. I think right now you're seeing a lot of analysts writing words like debate and battle between what's going on maybe in the fundamentals and what's going on in Washington with all the trade issues. Yesterday, Washington put tariffs on Canada, Europe, and also Mexico goods, and there was retaliation on U.S. goods that are going into those countries. So we'll see what kind of impact that has on the cost of materials here in the United States and what it's going to have as far as impact on GDP growth. So those things are kind of out there, and some analysts, grain analysts, would say if it wasn't for these issues and the uncertainty of the added trade issue with China, actually our prices might be a little bit higher. If we didn't have any China problems, they might be buying beans from us and to fill in part of the agreement they had when the trade group was in China. The other issue could be weather. You've got, let's say, 20% of the weather forecasters saying that when we come into work on Monday, we actually could see a ridge of high pressure in the southern plains with temperatures close to 100 degrees. Then some people think that that will bubble up into the Midwest with 90-degree temperatures and no rain. The other 80% says this is not going to happen. The temperatures will stay warm and dry like it does this time of year in the Southwest, but it won't bubble up into the Midwest. This morning's maps actually add a few rain showers into the Midwest before this ridge comes in. So Monday morning, Sunday night might be the first time we get to trade weather, whether it's dry or whether it's not. So we still have dryness in Russia, which should be supportive to wheat prices, but they're down overnight. And we still have this ongoing thing in the back of our heads that corn prices should inch up a little bit more because of the lower South American crops and the potential for a little bit lower crop here. The only problem is the USDA came out in their first U.S. corn crop rating at almost a record high, good, excellent rating. So the market is already plugging in record corn yields before the crop is even knee high. So basically, today is a day in which people either get out of positions or put positions on or go to the sidelines and kind of watch and see what happens next week when we come in and see what the 2-week U.S. Midwest weather forecast is. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.